One of the things that a lot of people talk about when you're running a software or a tech startup is how do you fund it? And it's something that we've always done what's called bootstrapping, which is effectively we've funded ourselves. And I was out for dinner through some different circumstances with Niv, and Niv and I got into a really interesting discussion about all the ways that funding work, and I discovered he has an incredibly rich background in this area. So I was very chuffed when he agreed to come and speak to us today. So he's going to speak to us about all things to do with venture capital, the funding, the different things that funders are looking for. And I think that should be a really nice way to kind of I suppose fill in the picture for something that we have really very little knowledge about, but it's great to get an expert in. So, mate, thank you very much. Let's give him a round of applause as he starts.
Ben, thanks very much, and hopefully everyone's had a really good day today. So, look, a little bit about my background and Peak before. I've come from an insto sales background. So I started my career at Macquarie Bank on the institutional side. Working predominantly with domestic offshore funds, selling the research, portfolio management, asset management. Left Macquarie at the start of 2010 to head up a group called Halifax Investments, the capital markets division, while I was responsible for what's known as statistical arbitrage or pairs trading. We then get a group called the Australian Stock Report on board as clients. They had a very small boutique broking firm called HC Securities. At the age of 27, went and ran that business, grew that business up, and then they tried to float that business, they tried to sell that business, and then at that point I said, well, this is not going to work, and set up Peak Asset Management. So Peak Asset Management, we're a very small boutique broking, investment management business based in Melbourne in the CBD. There's essentially four of us. We're agile, we're boutique, and really when you're looking at Peak Asset Management, there's three sides to the business. One is distribution, or your traditional broking. The second part is our corporate side. So we help a lot of businesses. Some of them are early stage businesses, some of them are later stage businesses, capital raisings, IPOs, roadshows to institutional investors. And then the other side is our fund. So we've set up a special opportunities fund, which is zero management fees or performance based. And we're really basically saying that the only way that we're going to make money is out of performance. Tom's come from, he runs a funds management side. He's come from a UBS, Goldman's background. Richard, who runs a strategic side, Bell Potter, and Fai's been on board for about a year and a half. Bachelor of Commerce with an econometrics, so he's very, very good on the statistical side. So what I want to talk to you a little bit more about is just really about the capital raising side and really keep it open, conversational. I brought a few information memorandums to go through towards the end. But really when you're looking at the life cycle of investments, you do start from an early stage, and we do see a lot of companies, and I want to give you an example of an early stage company called Pico. Pico has been around for about 4 or 5 years. Essentially what they do is they've developed basically a device that plugs into a cash register. So when you go to a JB Hi-Fi or a Metcash or a Celebration, it gives you real-time information about and loyalty about that customer in real time. The issue with Pico, for example, right now, and they're in that valley of death scenario where look, they don't have the resources to expand. They've got a great product. So they are in trials in JB Hi-Fi. They are in trials already in Metcash. They are in trials in Jockey in the US, in Macy's. But they just don't have the manpower and the money to really expand their operations. The founder is a very, very hard-working guy. Gets up at 5 in the morning, speaks to the guys in the US, then goes out and flies to back here in Melbourne, has meetings at JB Hi-Fi, tries to do basically everything and anything. And at that point, they did talk to us. And look, the issue is with raising capital for early stage businesses, it is very risky, right? It's either they're going to be a success or investors are going to lose money. So from when it comes to that perspective, you really need to undertake your due diligence very, very thoroughly. Now, once you do get that capital, right? So let's say we do decide we are going to fund Pico. Has anyone heard of Expert 360 in the room? So Expert 360 is another early stage company. It's a company that was established by two Bain & Co consultants. And really what they found, and for those that don't know Bain & Co or McKinsey, it's a management consulting firm, but what they really found is there's a big gap between finding work for high-end consultants who don't want to do the sort of the 9 to 5 with work. So they developed a platform, Expert 360, where high-end consultants such as ex-Bain & Co, ex-McKinsey, ex-KPMG, Macquarie executives can work consultancy work and projects and get paid very, very well for it. We looked at that business, but that business was probably around that after the Valley of Death. They already did a seed round, an early stage. They then went up to us and we introduced some Frontier Ventures which is a venture capital fund out of Russia, actually, and Rampersand, which really is a technology venture capital firm, and help them raise capital. So we got involved at around that $8 million valuation. They then got Alan Moss on board, and he used to run Macquarie Bank, Westpac, Gail Kelly, etc. And they went through, and they're probably at that break even or step number one, where they've really expanded operations. They're looking at the US market and they're doing all the right things. So then after that, then once that comes into the later stage is when we look at companies more specifically and say, well, are you ready for an IPO? And for those in the room who don't know what an IPO is, it's when a company going from a private business to a public business. There's essentially two ways to exit, or three ways. One is a management buyout. A management buyout is essentially where the managers go in the room and say, well, we'll take you out, we'll buy you out. The second way to really publicise the business for investors is through a trade sale or an acquisition, right? And the third side is coming to guys like us through an initial public offering or an IPO on the ASX or a different market. So we did cover a few of these. So the pre-seed and seed are really early stage rounds when essentially the team is small, it's agile, it's only got maybe starting just to generate revenue. So when you're looking at Pico, for example, and you're comparing to an Expert 360, Pico, even though it's been around for 3, 4, 5 years, it's still early stage, where Expert 360, when we first invested in that business, was doing about $100,000, $100,000, $120,000 month on month revenue, which is not bad. But fast forward 2 years later, with the right capital and the right funding and the right strategic advice, that last month they did about $1.5 million in revenue.